So the Bank of Canada is going to be holding rates steady, but for how much longer until we see that first cut? Well, in this video, we're going to be going over the reasons as to why we're not seeing that rate cut yet, the influence the US has on Canada, and also when we might be seeing that first rate cut this year.
Welcome back, my friends. Brandon Love here with Tom Moffat and the Canadian Mortgage Guide, simplifying all things mortgages and Canadian real estate. Now, let's dive into our first point. So, why did they hold?
Yeah, so we all expected the Bank of Canada to hold in April. That's not really a shock to us, but what the shock and really the changes that happened over the last, let's say, month is the fact that the US economy is still really strong right now, which puts Canada in a really awkward position because usually we follow what the feds do.
Yeah, so the US job report came back and it was very strong. Their economy is rocking and rolling in that respect. And it sounds stupid to say that we want job numbers to come down, but that's actually what the central bankers are looking for. If they see that jobs are continuing and the economy is rocking and rolling, they see no need to cut rates because it shows that inflation is continuing, stimulation is happening. When you start to see those job numbers come down, it's a sign that you're heading more in that recession direction.
Yeah, and keep in mind the target inflation for the Bank of Canada is 2%, and the last inflation report was 2.8%. So we're not really there yet. Although if you do take out the shelter costs, we are actually at 1.5% for inflation. Nonetheless, the Bank of Canada is looking for that 2%. So that's why we're not seeing that rate cut yet. Whether or not we see it before we reach that 2% target, time will tell. And even right now, a lot of people are predicting the rate cuts to happen past June. And if you asked a lot of economists and just people in general, we all expected rate cuts to happen at the very latest in June of this year. But now a lot of people are predicting it to go past that. And if you look at the traders, they were predicting a 70% chance of rates to cut in June. But now that's dropped to 42% after this past Wednesday.
Yeah, and a lot of this sentiment and things change day to day. So, what a prediction is today will change tomorrow with some other stat coming out. So, it's important to not like ruminate in this too much, but also if you're buying a home or you're thinking about investing in certain areas, these are important things to consider because it will have an impact on the value of those investments long term. So, the big question everyone probably came here for is when will they cut? So, let's get to the meat and potatoes of this. 10 rate increases followed by 6 pauses has done its job. Banks are ready for this, and they've set aside several billions to be ready for bad loans. Another important thing to watch is business confidence, and that is currently frayed. A lot of businesses could not repay the COVID loan to get access to the $20,000 of free government money. And that's a big indicator that they don't have the money. If they couldn't even pay it back to get 20,000 for free, which the businesses need, it's a sign that they are really struggling.
Yeah, and another indicator is the mortgage default rates. And although still very, very small, it has been on the rise in the past couple months.
Yeah, and that's something to watch out for because Canadians historically do not default on their mortgages. People will let a lot of things slide before they start skipping their mortgage payments. Another lagging indicator we saw was people defaulting on property taxes, and this has started to increase significantly. People aren't paying the municipalities. So that's something to watch because it indicates that people don't have the leftover cash flow at the end of the month to make these payments.
Touching on the mortgage default too, is the Bank of Canada, they know, pretty sure it's between 50 to 60% of Canadian homeowners have their mortgage renewing in 2025 and 2026. So the Bank of Canada knows this and they don't want these people to have payment shock. And we personally have been seeing that a lot more in our business with people coming up for renewal. They're kind of shocked at what their payment is. And yes, there's solutions to mitigate that for some people, like stretching your amortization and bringing that payment lower. But not everybody has that option. And the Bank of Canada knows this. And they really do have their hands tied on this one because they know they do have to cut at some point. But again, we're in that awkward situation where the US is just still thriving as an economy right now. So it puts us in that awkward spot.
Yeah, and while Canada does usually follow the Fed, don't be surprised if Canada cuts earlier this time. The reality is this will put a little bit of pressure on the loonie, but it will stabilize once the US follows course. So I still think we're on track for a June cut. I don't think it's going to be a huge one, but I think the economy does need a little bit of a cut and some momentum that way. There is one thing that could really impact that, and that's coming this Tuesday. So, well, we don't get too political on this platform. Trudeau does have a habit of fucking things up for the Bank of Canada. And next Tuesday is the federal government's big budget release. So, will Trudeau stay on brand and introduce billions in incentives? Probably. Will they usher in the return of 30-year amortization supported by the CMHC? Potentially. So, in short, will Trudy and his right hand woman, Chrystia Freeland, cause a bunch of inflationary moves to happen just before the Bank of Canada starts to cut things? There's a decent chance of this. The big issue with this is that the movements by the Bank of Canada have formed essentially a bottom in real estate right now. When they start to cut rates, prices will increase. If Trudeau and Chrystia Freeland implement some of these moves here, they will start increasing prices on real estate. And then, coupled with the Bank of Canada cutting, it would gas up real estate prices right there. That's a big risk because then rates have to increase again. The flip side of that is that if they do this, prices shoot up and Bank of Canada has to increase rates. Now we're going to see a move towards a recession. So it would be actually a policy driven recession because Trudeau is going to inflate the economy with these moves and then the recession would follow course there. So the hope really is that Trudeau can park his ego a little bit with next Tuesday's budget, not try to buy a bunch of votes on the next election, and recognize what's good for Canada as a whole, not just good for the Trudeau brand.
Yeah, very well said, Brandon. And there's a lot of things that can change over the course of even weeks to months. So really, time will tell. But let's talk about fixed rates for the time being. And I do want to stress, and we talk about this all the time. We want to get this message out there. Fixed rates are separate from variable rates when it comes to increasing, decreasing, holding steady. Fixed rates are really very much volatile on a daily basis, and it's really tied to the bond market. So, this past Wednesday, when we saw the Bank of Canada announce the rate pause, we did see the bond market spike quite a bit. And this wasn't because the rates were paused and because of what the Bank of Canada is doing. And it had a direct tie to the US with their inflation report. And that is what spiked the bond market. So we can expect fixed rates to increase in the near future. That's my prediction because usually the banks react to whatever the bond market does. So I personally hope we don't see that increase, but I do think it is coming down the line. But with that being said, it is more volatile with the fixed rates, and we've seen it decrease over the past couple months, which a lot of people aren't talking about. So if you are going out there for a mortgage, if you're renewing, refinancing, purchasing a home, whatever the case is, make sure you talk to your mortgage broker or the bank, whoever you're working with, to make sure where fixed rates are at the time, because like I said, they're moving and shaking on a daily basis.
Exactly. And a lot of this volatility causes people to sit on the fence. And we shared an episode about how to decide whether you should buy, whether the timing's right, and a few other things to consider and reframe. So check that out. If you're not a subscriber, please subscribe. We're going to share a lot of these details and juicy analysis for you as things go forward. So we'll probably give an update on the federal budget next week. And if you have anything that you want us to do a deep dive on, please throw it in the comments below. Cheers.